Welcome to PreciousMetalsInvesting.com. My name is Ted Sudol, and I have the pleasure of having as a guest today Paul Mladjenovic. Paul is the author of Precious Metals Investing for Dummies. He also has his own website, ravencapitalist.com. Welcome, Paul.
Oh, good to be back on the program after a long hiatus. And what better time? The world is just having lots of stuff going on. Here, the elections just occurred, Virginia, New Jersey, etc. And I think probably a good point of discussion really is the item I saw very recently that the latest data had showed that they, in terms of, I presume it's from the New York Stock Exchange or elsewhere, but they were measuring margin debt. And that margin debt, as of, I presume October of 2013, is at the highest that it's ever been. It was like $401 billion. And I hope that people see about the issues with that. If anything, by itself, all things being equal, it's not that alarming, okay? However, when you juxtapose it with markets that have been rising and a lot of pumping up into the stock market, by the folks at the Federal Reserve and their member banks, and how people have been plowing in, the bottom line is that people are using more debt in their stock investing. So really, you start turning into stock speculating, and at 401 billion, that's if it's an all-time high. Look, whenever we've seen that margin debt has been at an inordinately high level, much higher than average. 9 times out of 10, that has been really like a harbinger of some issues and a sharp correction. So I think this is a good time for folks to people start evaluating where they're at.
So, Paul, you wouldn't agree with the politicians who say we don't have a debt problem if there was no debt limit?
Well, I'm talking about margin in the stock market. You're crossing the line into another area. I think people knew what was coming the moment you said, "So, Paul, you don't agree with politicians." Have I ever? I don't recall you ever agree. But the thing is, even that realm, if anything, margin debt really is an example about the totality of what's going on right now. Now, I've been seeing, the later has been showing that there's been record high debt levels in many facets, of the American economy. College debt, corporate debt has been rising. Of course, government debt at the federal and state levels are also, at all-time highs as well. So this is going to be a huge issue, and I think that people have to start thinking, in more safer ways and reevaluating everything from their portfolio to their own debt levels, because these things only augur in some real difficulties and cash flow problems, etc. And if it's happening on a societal scale, you have millions of people involved with this kind of situation, and many investors in the stock market, what does that portend? That tells you it's a risk of instability in markets. So if you thought that everything was hunky-dory, because of what's been going on with the stock market the last 6 months or so, then the point is, now is the time to start treading carefully, because, as they say, everybody's happy, and most people tend to take on more debt when they feel optimistic. So if everybody's taking on a lot of debt and everybody's optimistic, but behind the scenes there's lots of debt and lots of difficulties happening, this tells you, you got to start being more careful and putting in some defensive or hedging moves, at least slowly.
And I think that's really an important point, that the more that you're sort of leveraging your position with debt, the more volatile the situation can become, and the quicker things can move.
Exactly. Lots of markets have been volatile lately, and even, look, precious metals are no stranger to this area as well, but this is why it's always been, you never borrow money to take on assets, unless you know that there's something behind. Like, for example, taking on debt to buy real estate makes sense because it's a huge purchase, and hopefully it's a rental. You have cash flow coming in, and you can be able to vitiate some of the things that are going on. But when you're talking about tangible assets and stocks, and you're lending debt into the situation, then you start taking on a new animal, which will cause you, some potential losses that were unforeseen and could multiply. So time to be very careful. Right?
Yes, it is.
All right. There you go.
Thank you for being with us today here at PreciousMetalsInvesting.com.
All right.
And make sure you visit Paul's website, RavenCapitalist.com.
All right. Stay tuned for next time.
Thanks.